Hello and welcome to our next NEP. NEP stands for Nonprofit Auditor Points, and I'm Irina Ryshkova, your nonprofit auditor. Friendly reminder, these videos are not authoritative in nature. I'm just auditor who's sharing my experience with nonprofit community. And today I would like to talk about how to record restricted revenue correctly. As an auditor, we do see that some nonprofits do not record restricted revenue correctly. Okay, let's talk about it. In accordance with general accepted accounting principles, when nonprofit receive restricted donation and restricted by a donor, it means it's either restricted by time or by purpose by a donor. The full amount of unconditional promise that's stated in a promise from a donor, typically in a donor letter or any other communication from the donor, needs to be recorded as a revenue right away. As soon as the promise is made, that needs to be recorded as a revenue. And I want to stress it, when I'm saying revenue, it needs to go to the revenue accounts, not in the net asset accounts, not below the line accounts. It needs to go to the revenue account in your profit and loss statement or statement of activities. It's the same statement, different names. So as soon as nonprofits receive unconditional promise to give, even before the money came in, it's typically grant letter or email or some communication from the donor, amount needs to be recorded as revenue, meaning it needs to be debit receivable, pledges receivable, accounts receivable, and credit revenue for the full unconditional promise amount. If your nonprofit receive multi-year grant, meaning that it will be supporting for 3 years, $100,000 a year, it means that as soon as nonprofit receive that letter, it needs to be recorded debit receivable, credit revenue for the full $300,000. In the year number one, when $100,000 appeared, nonprofit will decrease receivable, credit receivable, and debit cash. But revenue, once it's recorded for the full amount, it's just going to be recorded once and never be changed. Now you might ask, how do we know what is the restricted portion is still? So there's some nonprofits do various exercises with the QuickBooks or the accounting system how to keep track of it. But you need to remember that if you want to have a proper accounting system for your restricted donation, you cannot accomplish it in one entry. One entry meaning when you record revenue and you record receivable, it's not done yet. It means that you also need to record the transaction on the balance sheet, only balance sheet in the equity section, net asset section. You need to allocate, and it will be simply allocation entry that will not affect your profit and loss any longer. All you do, you just remove $300,000 from net assets without donor restrictions and put in the net assets with donor restrictions. You can create a separate account saying net assets with donor restrictions, $300,000. That's how you know your net assets now have restricted portion. Because accounting system works with debits and credits. If you're going to create account net assets with donor restrictions, $300,000, you need to decrease something, right? So you're increasing your net assets. Net assets a credit account, so by increasing you have to credit net assets with donor restrictions, and you will debit net assets with donor restrictions. But it will be simply reallocation entry in your net asset section. Common mistake that we see that nonprofit bypass your profit and loss transaction and record everything in the net asset sections, and that's not correct. Again, just to summarize, if your nonprofit received restricted revenue let's just say $50,000, you need to record two entry. Entry number one, debit cash receivable and credit revenue, restricted revenue for $50,000. Transaction two, simply on the balance sheet net assets section, you debit net assets without the donor restrictions and credit net assets with donor restrictions for $50,000. During the year, if your nonprofit spent $25,000, then expenses will be recorded as of expense. But if you need to reflect releases, you only do that in a net asset section. At the end of the year, you debit net assets without donor restrictions and credit net assets. You decrease in net assets with donor restrictions by debiting it. So you debit net assets with donor restrictions by 25, and you credit net assets without donor restrictions by 25,000. So this way, your ending balance on net assets with donor restrictions will be only 25,000. Once again, to make sure that you're keeping track of your net assets with donor restrictions revenue correctly, as soon as the donation was received, you have to record revenue for the full amount. And then the rest of the allocations will be done on the balance sheet side net asset section. That's really important that you understand how to properly record net assets with restrictions. It requires two-step process. You cannot accomplish everything with one entry. Hopefully that explains. Thank you so much. Let's continue recording. Talk to you soon. Be safe.